Hey, good morning. This is Meir Valensky with Driving Markets. Hope you're all well. Okay, usual caveat, anything said in this piece is purely an opinion, only for media publication. It's not investment advice, not financial advice, and anything you trade on your account is your money. You make it, you lose it, etc., etc. Let's kick off. Okay, so the big number out this week, as I mentioned yesterday, is the non-farm payrolls, the US unemployment figure. If you recall, the US unemployment figure came out last month, expected at 290 last month, came in 315, and that sent all the equity markets south. Absolutely trashed the equity markets and sent the dollar north. The dollar went north, the dollar went stronger because obviously if you have higher employment and lower unemployment, and that's going to feed into inflation. So full employment feeds into inflation, and that caused the Federal Reserve in America, the central bank, to have extreme concerns and therefore raise rates, and they're going to get more aggressive with rates as we go on. Now, if this number on Friday comes in better than expected, what does that mean? It comes in above 290,000 on Friday, then obviously the markets are going to fall again. The dollar's going to get stronger and stronger, and off we go with another round of falls in financial markets. Now, what's been interesting is, just steady the phone a little bit because I'm driving. It's called Driving Markets. What's been interesting is speaking to many traders and investors. Most of them have tried to guess where the bottom of the market is. Excuse me, let's have a bit of water. Excuse me. Most of them have tried to guess where the bottom of the market is. And in a bear market, very, very difficult. It's something that's very dangerous to try and catch a falling knife. We are in a bear market, and the markets are going to continue being in a bear market and going down as long as inflation is high and interest rates will aggressively rise, whether it's through Australia, through Canada, through America, through Europe, and through UK. When you've got rising interest rates, you've got less liquidity, less available money in the marketplace. If you look simply at mortgages, mortgage rates are running at 5-6%. And that's causing a major concern for householders, because those mortgages that are coming to the end of their fixed year or fixed term, the actual homeowner is going to get a shock when they come to renew their mortgage rate. It's going to be 3 to 4 times the amount that they were paying previously, and that's going to take away liquidity and more money out of the household and have a bigger impact on less money floating around. Regarding financial markets, let's just break it down. The dollar is going to continue getting stronger. The pound's going to go down, unless Andrew Bailey does something specifically. The euro is going to go down, and the dollar is going to go up because the dollar is now a sought after currency. Looking at some of the commodities, interestingly enough, the question is, where will gold go? Will gold go up or will it go down? So my overall view on gold is that it'll probably float down to the 1600, 1620 level, stabilize, and then move up, because gold has to be part of your portfolio. It's used in everything, whether it's used in dishwashers or used in phones, they're used across the board. Gold is a major metal that's used in all types of manufacturing, so there's always going to be demand for gold. So gold is definitely there to be part of your portfolio. If you're trading gold on a daily basis, very hard to call on a daily basis, but the swing trade, the one that goes on for 3 days, 5 days, or a week, 2 weeks, you're probably better off under that type of trade. Gold with the other precious metals, gold being one of the precious metals like palladium or platinum, obviously they've been under pressure due to the war in Ukraine and fears of recession, where there'll be less demand for the precious metals. But as fear factor, or as it reaches its bottom, then you're likely to see especially gold move up. So gold is probably a good one to keep an eye on. Oil is interesting. Oil is going under recessionary pressures because there's now a concern that there won't be the demand for oil that there was beforehand, therefore the prices come off. The question is, will it fall below $70 a barrel? It could well touch that, but I do think the overall trend on oil is up. We haven't yet broken that up trend. Regarding equities and shares, if you're dealing in equities and shares, whether US, UK or European, there's obviously a lot of pressure on those shares. I mainly focus on the big FANG shares, the Facebooks, the Apples, the Amazons, the Netflix, the Googles, the Salesforce, all of those types of shares, they're going to be under pressure, especially the ones I've focused on recently, which is going to be Apple and Facebook. But now Google's going to come into pressure because Google has 58% revenue on its search engine and therefore charges per click, and that also could be impacted. So Google could be overpriced and could be again going down with the rest of the high techs. Remember, as interest rates rise, the high techs are going to fall because they are high risk and most of them cannot produce any profits or pay dividends, so they're going to be under pressure. Going forward during the week, you're probably going to have looking at the Dow finishing to 25,000 by the year end and the Nasdaq below 10,000. Got to mention Bitcoin, the cryptos. Bitcoin's really under pressure, and Bitcoin is definitely going to go down, in my opinion, to 15,000 near term. It's holding at 19,000, but it's going to come under pressure as rates rise, and rates will rise. We're going to see to 4.5% to 5% in the US, in the UK probably 3.5% by the year end, unless Andrew Bailey comes up, supports the pound and pushes interest rates up by 1 or 2% beforehand, which he should do, but I don't think he's got the balls to do it. Anyhow, this is Meir Volensky with Driving Markets. Subscribe, comment, you can see him on Instagram, Twitter, all the usual social media. Speak to you soon. Have a good day.